Shalom. First and foremost, I want to give all praises, honor, and glory to Yahweh, Ba'ashim Yahushua, Ba'ashim Rekah Kadash. Double honors to the elders and apostles of Great Millstone who rule well. And Shalom, Salaki, and peace and blessings to your elect. You know, as you can see, I just got this article. This is Al Jazeera Live. You know, I tried doing this video later, but something was happening. But Asian stocks, oil prices fall sharply as inflation concerns mount. Investors fear swift consumer demand rebound with trillions of dollars in stimulus measures may drive up inflation. Brothers have been telling you that, yesterday, who did I see? I seen the brother Rakar, those Zebulon Warrior 144. I seen the Elder Malcolm, from Chicago, do like a video on this, something similar to this yesterday. My brother's been telling you, they say putting trillions of dollars may drive inflation, man. Because when you think about it, the US dollar, yeah, or let's just take paper money or money in general, right? It's money that was given a value, man. When you actually look, when you get down to the base of it, its value is not constant, like gold and silver. It was given a value. At 20 pounds. That you have, that 50 pounds you may have. That's value that it was given, not value that is worth, man. They're putting in, if they would what did it say, coupled with trillions of dollars in stimulus measures, pumping in money that they don't have. Like I always be telling people, I remember telling my mom about this, this pandemic. They're putting in money they don't have. This is the perfect time, This is why this is, the perfect time for them to go along with a lot of their agendas, man. Because this whole pandemic is giving them the perfect excuse. Because we have two problems, You have the problem to the economy that the pandemic is causing, which this most likely comes under that bracket. Then you have this inflation, we've been talking about inflation. This inflation that that's starting to get the eyes to catch eyes and say that it could become a problem. And you know what? Scripture just came to mind. Rich is profit not in the day, like the scripture says, rich is profit not in the day of wrath, but righteousness delivers from evil. I believe it says. I can go to it right now. This is Proverbs 11:4. Riches profit not in the day of wrath, but righteousness delivers from evil. I mean, I keep saying evil, man. Salaki, forgive me. Salaki. We start from the top. Riches profit not in the day of wrath, but righteousness delivers from death. The wages of sin is death, man. That the scripture says, Let me go back to that. Asian market share slipped on Friday after a spike in global bond yields saw sentiments towards richly priced stocks, while concerns that a recent run-up oil prices may not be fully justified by the level of demand sent crude tumbling overnight. I know reason why I put that scripture in so early is because I remember reading it yesterday, and that's the same scripture that came to mind. I can't remember, which part it was, but, that scripture came to mind. Having plunged 7% in London and New York Brent crude futures, managed an feeble bounce of just 11 cents to 63.39 US dollars, I'm guessing, a barrel. While the United States crude added 6 cents to $60.06. The retreat wiped out 4 weeks of gains in a single session. Wiped out, meaning that it wiped out meaning that it wiped out, profits. But you gotta imagine, people like the people in the world, like they don't really know what's going on. They a lot of them and a lot of people that I've talked to that are really trying to invest in stocks, man. But what you're gonna do is per se if the stock market crashes because they can't see anything further like we can. We see there's light at the end of the tunnel, like there's a kingdom, man. Let's continue reading. Financial markets were also unsettled by the Bank of Japan (BOJ) decision to slightly widen its target band for a 10-year government bond yield and tweak its buying of assets. The bank portrayed the changes as a nimble way to make monetary easing more sustainable to investors seem to take a step back from all-out stimulus. The bank wait, hold on. Yeah. The Bank of Japan's decision to continue to confine its purchases of traded funds to those linked to the Topix index knocked the bench Nikkei stock down 1.6%, while South Korea lost 1%. Because one thing I've noticed, people are focusing, a lot on these kind of things right now. But what if something major was to happen, a major and was say hyperinflation, you know, and even if they had a lot of money, it wouldn't really be worth anything because I don't know if some of y'all know about this here, but it was a hyperinflation that happened in I believe it was Zimbabwe, not too long ago. I can't even see how long ago it was. So even if you had they had like $1 trillion note, but in the Great British in the pound, if it's not even a pound. In the British pound, it's not even a pound that $1 trillion would be worth. So you gotta imagine, man. Where am I out to? I'll just start from where topic index, not the benchmark. Topic index, not the benchmark. Nickel Nikkei stock index down 1.6%, while South Korea lost 1%. MSCI broadest index of Asian Pacific shares outside Japan followed with a fall of 1.5%. Chinese blue chips shed 1.9%, perhaps unnerved by a fiery exchange between Chinese and US diplomats at the first in-person talks since US President Joe Biden took office. Nasdaq futures were flat after a sharp 3% drop overnight, while S&P 500 futures added 0.1%. European futures followed the overnight with the Euro Stock 50 down by 0.8%, and the FTSE futures 0.6% lower. Yeah, I think that's interesting because all this what you see before you that's gonna be brought to naught real soon, man. I will pray to Yahweh Shim Yahushai, to hasten the day, man. You can see for those of you who know what trade who are familiar with trading, that's what they call a candlestick graph, if I'm not mistaken. It's how traders use it to execute their trades. I believe the blue is the buying line and the green is the selling line. I could be mistaken, but let's continue reading. Fed versus markets. Investors are still reflecting on the U.S. Federal Reserve pledge to keep interest rates near zero through to 2024, even as even as it here is even as it lifted forecast for economic growth and inflation, you know. And they wanted to go to 2024, man. And brothers don't even want it. Brothers want brothers are trying to hasten the day. We praying that the Passover that's coming up, that's the last Passover, man. We um yeah, like when you when you talk to these guys, they say 2030, 2050, we're gonna be doing this, 2024, this, that, and the third. Like it says in Psalms 49. In fact, let me get like it says in Psalms bear with me 1 minute. Alright, this is this is Psalms 49 and 11. Their inward thought is that their houses shall continue forever, and their dwelling place to all generations. They call their lands after their own names. We already know what this is talking about. You have a land of Ham, which is renamed Africa. You have America. I believe that was renamed after yeah, America. I believe it was an emperor, but I'm not 100% on that one. I could I can get into that one another day. Federal Reserve Chair Jerome Powell seemed likely to drive home the dovish message next week with no less than 3 appearances lined up. Stronger growth and higher inflation, but no rate hikes is a pocket cocktail for risk assets and equity markets. I said Nomu, Nomu, Nomura economist Andrew Ticehurst. Yields on US 10-year Treasury bonds spiked highest since early 2020 at 1.754%, and they are last at 1.71%. If sustained, this would be a seventh straight week of increases, adding a huge 64 basis points in total. The drastic bearish moves in bonds reflects the risk that the Federal Reserve is serious about keeping short-term rates low until inflation accelerates, so require long-term bonds to offer fatter returns to compensate. The latest B of A survey of investors showed that the rise in inflation and the bond taper tantrum had replaced COVID-19 as their number one risk. And if I'm not mistaken, I mentioned the COVID-19 problem, the quote unquote pandemic, early in the video. They have this problem. What do they have? They have the COVID-19 problem, and they have this problem, right? So what they deal with is order of okay, create the problem, then make the solution. This is a way that they can bring the chip, man, because they're like, okay, so we may be facing a major problem with the economy, and this quote unquote pandemic, this so-called virus is adding to it. So what we're gonna do? Even countries like China, they already they're already introducing, that digital money. Especially Sweden, they're already familiar with that chip, man. While very bullish on economic growth, company earning and stocks respondents feared a sharp setback for equities should be a 10-year yield rise above 2%. Firmer dollar. The jump in Treasury yields provided some support to the US dollar, though analysts fret that faster US economic growth will also widen the current account deficits to level that will ultimately drag on the currency. For now, the dollar index bounced to 91.853 from a low of 91.30 to leave it slightly firmer for the week. The US dollar steadied against the low yielding yen of 108.91 just after recent 10-month top of 109.36. The euro eased back to 1.1914. The rise in bond yield has weighed on gold, which offers no fixed return, and left it on 0.2% at 1,731 an ounce. That's the end of the article. I did mean to post this yesterday, but I was in the middle of a video, kind of didn't want them, my mum to know, so I paused the video, but then, I wanted to take it back from the top, so, Salakia. So, I want to close out by saying, Call Allah, Yahweh, Bashim, Yahshai, Bashim, Rakakadash. I want to say shalom for those. I want to say shalom for those who are actually listening and learning. May the blessing of election be upon your house. With that, I will say shalom.